MBH Corporation is a diversified investment holding company. It's based here in the UK, but it's listed in Frankfurt and most recently listed here on the London Exchange through Aquis. The founder and non-executive chairman is Callum Laing. He joins us now on the line from Singapore. Callum, good to catch up with you. Interesting company. I'm new to MBH Corporation, but having read through the details on the website, I'm really quite interested in the way in which it's put together and how you make money. Explain the business model.
Yeah, it's quite a unique structure. So we're basically a conglomerate, but of small owner-operated businesses. I think there's been plenty of companies that have tried to roll together small businesses. We've taken a very bottom-up approach, very entrepreneur-friendly. So most of the businesses in the group, and we have 28 now, are owner-operated businesses. Sometimes they're second-generation family-run businesses. For them, it's very important that they keep autonomy in their company. So it's their brand, it's their culture, it's their hiring and firing. So we give them that opportunity to continue running in that autonomous way, but they're part of a bigger group, a public listed company, which means that they can leverage the balance sheet of the entire group to win bigger contracts. It means that they can give stock options so that they can entice the best staff. And it sort of allows small businesses to compete on a level playing field with big companies. So that was the intention, is to help these small businesses. But it also gives quite a unique investment tool for investors to access small businesses. That we're kind of in this weird situation where 50% of the world's GDP is locked up in small businesses, and there's no financial instrument for sophisticated capital to invest in small businesses. So by putting lots of them together and under one holding company, it actually gives investors a chance to benefit from that small business.
So you said you've gone from 0 to 28 companies, what, within the 4 years you've been around. That sounds quite a large, a very quick track record of acquisition. Is it acquisition, or do people come knocking on your door saying we want to be part of the organization?
We actually get over 1,000 applications a year from companies that want to join us. Now, not all of those are appropriate. Many are too early stage. We tend to work with quite mature companies. I think the average age of the company in the group is around 23 years old. All the companies we work with are profitable, typically old economy businesses. And while in technical terms it is an acquisition, to the small business owner, in effect, they're actually kind of taking themselves public through our holding company. So it's much more set up for them to access the public markets through us, rather than sort of a traditional M&A approach where we would acquire them, fire half the staff, rebrand the company, destroy all the value. But that's the sort of the traditional approach that we were trying to get away from. And consequently, it solves a very real problem for small businesses that are typically uninvestable otherwise. They get access to the sort of the wider market, and they become part of a peer group of other business owners that also have a vested interest in their success. So there's some very nice kind of collaborations that happen organically within the group.
It's nice actually to hear an organization which is the polar opposite of what used to happen 20, 30 years ago. Asset stripping used to strip a company right back to the bare bones and then sell it on. So you are the antithesis of that. And I also noticed as well, you have won awards for ESG, which again is the polar opposite of what we've just been talking about. So this all goes to give a positive impression of MBH. Explain what you do about that and how you go about your the ethos for ESG.
Yeah, so to us it's really obvious, but that's because we come from a small business background. So what we were looking at is, look, you get all these incredibly good small businesses. Again, old economy is most of what we deal with. So construction companies, education, transport. They may be first or second generation. They're good, they're profitable, they're cash generating, but they're too small to win really big contracts. They're uninvestable in effect, because investors want to be able to get in and out, and small businesses are illiquid. So we really we're trying to solve a problem for them. And so everything is derived around that. So you're absolutely right. It is the opposite of that asset stripping. It's also the opposite of, when companies get bigger and they move into the private equity space, private equity is again fairly similar. The idea would be you buy the company, you cut all the costs, you leverage it with as much debt as possible, and try and squeeze it for every penny. And I think the business owners that we work with, most of them have spent 2 decades building their business and supporting their local communities. For them, legacy is quite important. They're probably only going to work for another 3 to 5 years before it's time for them to retire. They don't want to see their life's work destroyed by some private equity company that just wants to flip it for a buck. So we start the entire business is very much built from that bottom up. How do you appeal to business owners first and foremost? And I think that's why we get such a huge amount of deals coming our way, and that's allowed us to do so many deals and grow so quickly.
And what sort of percentage are we talking about here about the ownership of stock from the original owners of companies? Because it sounds interesting. I mean, this idea in Germany is actually quite normal, isn't it? The old Mittelstands, the family-owned businesses, the businesses that grew up and continue, as you say, to service the local community. But in the London market, the main London market, you do see an awful lot of this, build it up, sell it on, and, as you say, load the balance sheet up with debt. What sort of proportion are these companies owned by the original owners?
So what's interesting about our structure is every company that joins gives up 100% of their equity to join the company. So they're all 100% wholly owned subsidiaries. Typically, the founders of those companies swap their private stock for public stock in MBH. And so actually, if you look up at the makeup of MBH shareholders, somewhere between 60 and 70% of the shareholders are all the business owners themselves. So very, very vested in the long-term profitability and success of the group as a whole. And that's another reason why we sort of end up with very good governance, very good transparency, because the business owners themselves are the ones that are driving this, and they're pushing for this to be a multi-billion-dollar group of companies, because every time we add a company, we add knowledge and resource and network, and these companies can then work together. It's almost kind of like the ultimate mastermind group, but everyone has a vested interest in each other's success. So it works very well.
One final question, and I know you've got results coming out in a month or so's time, so I don't want to talk too much about what's going on under the covers, because obviously you're not able to do that so close. But I do want to find out a little bit more about how you reward shareholders in MBH. What's the strategy there? Because clearly, as an investor, and anybody looking at this interview may be interested in finding out more. How do you reward those people that come to you to buy your stock?
Yeah, absolutely. Look, the idea is that we're looking to grow. As I mentioned, the objective is to add in more and more companies. So we'll grow the total revenue, we'll grow the total profits. We have always been profitable since day one. We've always issued dividends since day one, and that would always be the intention moving forward. So I think it's an interesting one, because it kind of looks like a value play insofar as it's a group of old economy traditional businesses, but it's also a group that has, and without going into the revenue, but has grown incredibly quickly over the last 4 years. I think that there's not many companies that have grown as fast as we have revenue wise. Certainly in the microcap space. There's tech companies that have grown fast, but typically they're not profitable. So we've grown and we have that profitability. So hopefully it's a way for investors to get exposure to that small business, a diversified small business, almost like a tracker fund of small businesses in effect, plus get dividends and hopefully get the share appreciation that comes with that growth as well.
Just very briefly as well, the current environment, how do you respond to rising interest rates, the threat of inflation, banking crisis that seems to be sort of simmering on the outlines of what's going on at the moment? Are you broadly insulated from this? You've got a fairly wide spread of 28 companies, gives you a nice, quite sector diversified spread of risk. How do you feel about the current environment?
Yeah, so our timing was fantastic. We listed at the end of 2018. We had a wonderful 2019, and then COVID hit, and it's kind of been all over the place since then. Look, you're right. We very deliberately are diversified. We're across 6 countries. We're across 8 industries. It is challenging times, but I think all of the businesses that we're working with, we're not working with young startups. These are well-established businesses. They've all been and survived through the global financial crisis. So they're all familiar with this, and they're now in an environment where they can work with each other and swap ideas. So it's tough, but I think most business owners are pretty adept at dealing with tough scenarios, and they just get on with it and focus on serving their clients.
Yeah, that's the way to run business, of course. Look, Callum, it's a pleasure. Thanks indeed for joining us. It's a really interesting story. Looking forward to hearing more, and do keep in touch.
Yeah, thanks very much. It's great to be on.
That's Callum Laing. He's founder and non-executive chairman of MBH Corporation.